It's year end and you may owe big taxes on mutual fund distributions if you don't plan carefully. Alex, today we're going to talk about how to save big on your tax bill. Okay, Alex, so we are approaching year end here, and people don't often realize that mutual funds can release big distributions towards the end of the year, which is taxable income, even if they don't sell.
Yeah, that's right. So the way a mutual fund works at a really high level is when they buy and sell securities within the mutual fund, those gains are distributed to you, the investor, if there aren't any losses to offset those gains, which can be a bit frustrating for investors because they have a little bit less control over the taxation and the ability to control that at your end.
Right, so we're specifically talking about a taxable investment account, not a retirement account. So what steps can people take to help avoid or minimize these taxes?
Well, the first thing you need to do is research and look up what the expected mutual fund capital gain distribution is expected to be, right? So, one of the easiest ways to do this is you just kind of type in your mutual fund capital gain estimate 2020 into Google, right? Google knows a lot of stuff. It'll usually pull up what that estimate is going to be.
Towards the end of the year here.
Exactly. Yeah. That's really like the first step. Then the next step is to look at your personal holding of that investment to say, okay, do I have a gain or a loss in that investment? If you have a loss, it can kind of be a slam dunk to sell, realize that loss, kind of tax loss harvesting, and then avoid that capital gain distribution that might be coming out. Right. If you have a gain position, right? If you have a mutual fund where it's grown in value and it's in a gain position, that requires a little bit more analysis, because at that point, what you want to do is figure out, okay, is it more advantageous to me to hold on to my mutual fund, receive the capital gain distribution that the company is going to spit out to me, right? Or is it better to sell my fund, realizing some gains there, but then avoiding a possible bigger distribution from the company, right? So those are really the big steps there, and you really have to look at both the estimate of what the company is going to distribute and compare that to what your personal tax liability is on the mutual fund that you hold. The one thing I want to point out is if you do sell, right, if you do decide to sell your mutual fund before the distribution, you want to make sure to sell it before the ex-dividend date. That's a very important date.
Timing is really important here.
Exactly. If you don't, all this is fruitless and you'll be still be getting that gain distribution.
Yeah, and this can be a complex thing if you're not dealing with it every day. So definitely consult your tax advisor, your financial advisor to be able to work through this.
Yeah.
And the other part of it too is not just avoiding tax, but in a lot of cases, if you sell something, you still want to be able to participate maybe in the market increasing if that does happen. So buying a substitute fund to participate in a recovery. Also, if you're selling at a loss, not immediately buying that same fund back because there's something called the wash sale rules. So this can get very complicated quickly. We just wanted to give you the basics here. There is more that goes into it. Make sure to consult your tax advisor, your investment advisor as well. These are the types of things that we help people with to help them grow and protect their investments, but also to save on the bottom line of taxes.
Exactly.
If you'd like to talk with us, go to our website, onedegreeadvisors.com. You can schedule a call with us there. We'd love to talk to you.